Hello and welcome to Free World Investing. Today we're going to be going over how to trade with pivot points. This is the standard version of pivot points. So there's also pivot points high-low, which we'll be going over in a different video. But today we're going to go over the standard pivot points. Now each one stands for pivot, resistance, support. S stands support, R is resistance, P is pivot. Now each number stands for another resistance or support line, and as they go on, they get a little bit stronger, and the market will feel the push of being from there. Now, if you're starting off, when you're just starting off, say Sunday, like say this is for the forex market. It's a little bit different with a stock market, but very similar. If your line is already below or above the pivot point, it's normally for the opposite direction. See, even right here, the starting price was above the pivot line. It went up and consolidated back down. Pivot line, it didn't do it this time, but I mean, that's just the general, like normally it tries to reach the pivot point. That's when it's first starting off, and then it'll generally go to the support or resistance. And a lot of times the biggest traders are the ones that you want to get when they hit the support or the resistance line. The support, resistance, and pivot lines are always established by the previous period. For this one, we have a week. These pivots are set for a week. The pivot point is about the middle of the last section, and the support and resistance lines are the value difference between the previous sections, difference between its pivot and support and its pivot and resistance. It's kind of interesting how it's done. That's not exactly quite how it is, but if you use that logic, it gets you pretty close to the estimate every time. Now, there's a variety of different types of pivot points because they have pivot point Fibonacci, Woody's, and they're all calculated slightly differently. And to do that, you would go right here and you go to inputs. And a lot of people trade a lot of different ways. Traditional is the most commonly traded one, and if you're interested in market psychology is really what runs the speculative market of stocks and forex. So traditional normally has the largest impact, but not always. But you can switch it just by going there. And also you could switch the pivot time frame as well. And this is incredibly helpful. Sometimes you could change the pivots back, and you can also change weekly, monthly, yearly. Sometimes it's pretty cool to do all of them, and you can see where you are compared to the daily, weekly, monthly, and yearly, and it lets you decide like what's going on in comparison to all other time frames. Now, I'm on a 4-hour time frame, and you wouldn't really want to use a daily pivot point for this just because it completely clutters the chart and it makes it look ridiculous. But weekly, monthly, and yearly are very good on the 4-hour time chart, and you can understand where you are a little bit better. But a lot of times, if your support, if it breaks past the support line, you're pretty sure it's going to go up. And then if it goes down to the second support line, it's a good time to, increase your position size since you're in the negative. And it's very possible when you do that, you can get out of the negative with the next trend up. And, vice versa for the resistance lines. I mean, this isn't always the case. Sometimes you got to know when to cut your losses. But it really depends on how much you're risking per trade as well. Support the pivot points are really good if you are trading options as well. If you're trading options, it lets you get a clear point for a reversal, and if it meets the option point, it's really good. So if you land on like a 20 for Nadex, it's very helpful. But there's a variety of different ways that you could trade with the pivot points. Like I said, there's the different time frames, and understanding time frames is very monumental when trading in forex or stock, because it lets you understand the general sentiment of the market and how it changes. Because sometimes you will see different things on the daily pivot points where it will be reacting heavily. Just in this 4 hour chart right here, just say this candlestick that's along the pivot, it could have bounced and retraced several times. Even on this one right here, it came back, it broke past the pivot point, and the pivot point gave it that resistance in that 4 hour time frame to come back up. Once it hit this resistance right here, it definitely paused on this resistance and then went down before coming back up. And that was just everyone pushing it down in that time frame. It's super helpful if you understand how order books work, and we'll be going over that in a later video. So if this has helped you in any way or form, please like and subscribe, and watch the additional videos that I have uploaded for trading. Hope you all have a wonderful day.